Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden in plain sight within corporate documents. Today we are diving into a special filing from Horace Mann Educators Corporation. Get ready because this report is all about them saying goodbye to some of their debt, and for investors that means we need to look at what this actually means for the company. So Horace Mann Educators Corporation, a company that focuses on the education market, has filed a current report. This isn't a full quarterly or annual report, which usually means something specific and important has happened. Think of it like a pop quiz for the company, and they are telling everyone what the question was and how they answered. What is the big news here? Horace Mann has decided to redeem all of their outstanding 4.500% senior notes that were due in 2025. Now, what does that mean in plain English? It means they are paying back a loan early. They have some debt, which is like money they borrowed from investors or banks, and they are choosing to pay it all back before the original due date. This repayment is planned for the 14th of October of 2025, so they are giving themselves a couple of weeks to get everything in order. The company is essentially saying they will pay back 100% of the money they borrowed, plus any interest that has piled up by that redemption date. It is like settling your credit card bill before the actual statement is even fully generated. Now, why would a company do this? There are a few very common reasons. One big reason is that interest rates might have gone down since they first borrowed the money, so they might be able to borrow new money at a lower rate, or just have more cash on hand and want to get rid of the interest payments. Another reason could be that they have a lot of cash currently, and they do not want to pay any more interest on this particular debt. Paying off debt early can be a sign of financial strength. It shows they have enough money to manage their obligations without needing to wait for the due date. For investors, this can be a good sign as it reduces the company's financial obligations and the risk associated with having outstanding debt. This filing is pretty straightforward. It is really just announcing this debt redemption. They are notifying everyone that this is happening. It is important to note they explicitly state this document itself is not the official notice for the note holders, but it is the public announcement to the market. The report is signed off by Maureen Temchuk, who holds the titles of Controller and Chief Accounting Officer. This is a standard procedure for these kinds of filings, ensuring it is properly authorized within the company. Now let's think about the angle here for Horace Mann Educators Corporation. They are focused on serving educators, and this move to pay off their senior notes suggests a healthy balance sheet or a strategic financial decision to potentially refinance at better terms or simply reduce interest expenses. In the world of corporate finance, managing debt effectively is crucial. By retiring these notes, they are reducing their fixed interest payments that were due to continue until 2025. This frees up cash flow that can be used for other strategic initiatives like expanding their product offerings, investing in new technology, or returning value to shareholders through buybacks or dividends. From a Warren Buffett style perspective, we always look for companies that understand their business and manage their finances prudently. Paying off debt is often a sign of a company that is not over-leveraged and knows how to allocate capital wisely. For Horace Mann, this could mean they are confident in their future earnings and cash flow generation, making them feel comfortable with reducing their debt burden. Now, we do not have deep financial tables in this specific filing to dive into numbers with percentages and trends, which is usually the juicy part of these reports. However, the decision to redeem debt is itself a significant financial event. It signals a proactive approach to financial management. Looking ahead, the key for Horace Mann will be how they utilize the freed. Up capital, will they invest in growth, or is this just a housekeeping item? Their performance will ultimately be judged on their ability to generate strong returns for their shareholders, and debt reduction is often a foundational step in that journey. So, in conclusion, Horace Mann Educators Corporation is proactively managing its debt by redeeming its 4.500% senior notes due 2025. This move points to a potential strengthening of their financial position and a focus on reducing interest expenses. While we would love to crunch more numbers, this filing is more of an announcement of intent and execution of a financial strategy. Now, what is your take on Horace Mann's decision to pay off debt early? Does it make you more confident in the company, or do you see other implications? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more clear and simple explanations of complex financial documents. Also, don't forget to join our Discord community for further discussions. The link is in the description. Thanks for watching, and we will see you in the next one.